Hi everyone and welcome to today's morning report on Monday the 2nd of February with me, Rich Perry, market analyst at Handtech Markets. The European trading session has got off to a fairly positive start actually, and that's actually come as, well, despite the fact that we had a slight miss on the Chinese PMI data, the HSBC PMI there from China, slightly missing expectations and showing a slide back to 49.7, but the European PMIs have actually come in, and they're coming pretty reasonably positive. Actually, the official data, the Eurozone wide PMI data came in at 51.0, which was as expected. But across the board, pretty much Germany was a very slight miss, but France improved with a slight miss. But still, we had Italy better than expected and Spain better than expected. And I think that the fact that the Chinese PMI is still remaining above 51.0 is fairly encouraging actually for the Eurozone going forward. Also, just recently we've had the UK PMI data for coming out at 53.0, which again was a slight beat of expectations actually, so some pretty reasonable numbers coming out there, not hugely smashing the lights out, but still some encouragement there. And I think the European stock markets have pretty much sort of reacted on the back of that. Also, we're seeing the euro, which is reasonably positive, 45 pips up on the dollar today, and also sterling, which it actually had been weaker but has now reacted more positively following that UK PMI. Interestingly, we're still seeing this dollar index pretty much just consolidating sideways really, and I think that's pretty much a function of the fact that the euro has not really been sold off significantly in the last few days, and I think that's something we need to keep an eye on, because the euro is holding up pretty well at the moment, and that is something of I think quite importance. Now, in terms of stock markets, we've had a bit of a choppy time of it recently. The VIX, for example, is still just slightly edging higher still, and you'd say that is generally not all that positive. And certainly, if you look on the S&P 500, it is just on the needs to find support now, just underneath this 2,000 level. And it needs to start rallying again, otherwise it could be giving some sell signals. Interestingly, also, this is the oil price. This WT oil has broken back above that big downtrend channel that it had been finding resistance at, and it broke quite sharply higher on Friday. Also, the Brent crude price as well is above its 21-day moving average for the first time since June, and that is showing several interestingly positive indications there on the technicals. So something that we need to keep an eye on also. That's the momentum indicator of the dollar index, which is slightly just consolidating, but is still fairly positive. Now, what we've got to also bear in mind today is, for example, on the Swiss franc, which is my chart of the day, the SNB over the weekend reports that suggest that they're unofficially targeting an area of 105 to 110 on the euro, which could cost them as much as maybe 10 billion Swiss franc to do that, and that is certainly pulling the dollar Swiss higher and also euro Swiss higher as well. So interesting moves on the Swissy today. We've got the US manufacturing PMI, which is the ISM. I'm going to call that ISM. My mistake. ISM manufacturing PMI for the US, and that's forecast to just drop actually to 45.5 today, which is down from 55.5, but still fairly reasonable in terms of its growth number. So that's this afternoon at 3 o'clock. So my look at dollar Swiss, which is my chart of the day. Now, this chart has certainly been settling down. This is obviously the huge day that we saw a few weeks ago now, Black Thursday they're calling it, when the S&P got rid of the floor against the euro, and the price has certainly settled down, and certainly the dollar bulls seem to be now edging back higher all the time, edging back higher, and it shows quite strongly on this. This is the intraday hourly chart over the past couple of weeks really. Once we got above that 88 88 ceiling there, which was just holding it back. There was a breakout, and it seems to be now stepped advance. You've got this consolidation through the front end of last week, which broke above eventually that 91.60 level, and that 91.60 level is now becoming the floor. If I put my crosshairs on that, you can see that quite nicely. That breakout above that high becomes the new support, and what we've seen today is another breakout, a breakout above this reaction high at 92.90 today. Just consolidating slightly on that breakout, but still it looks like this is going to be a positive move. But certainly looking down at this the RSI momentum indicator on the hourly chart, very strong, camping nicely above the 40 levels, so that would suggest any sort of consolidation back towards 50, maybe even just under 50, would give you a buying opportunity. MACD lines also on the hourly chart nicely poised, and it just looks like any sort of dips are being seen as a chance to buy now. You could argue also on this hourly chart that you've got the 55-hour moving average, which is a basis of support, currently comes in at 92.25 area. So several reasons why, fundamentally and technically, why dollar Swissy should be pulling higher, and I would be using any sort of dip on the dollar Swiss as a chance to buy. It looks pretty decent. In terms of this key supports, 91.70, 91.60 is obviously the key level area, but to be honest, the bullish outlook wouldn't really be broken until you broke back below that 89.30 mark, so quite a lot of room on the downside for the bulls to buy into. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.